By discounting of bills, a bank also creates credit through discounting of bill of exchange. In this method, the bank discounts the bill and issue a checkbook after the opening of account for the amount of discounting bill instead of giving cash by supplying of loans. When a bank agrees to grant loan to the borrower against the security, then it opens an account of borrower for the grant amount of loan instead of giving cash. If the borrower wants to make payment to another person, then it is issued the check which is deposited by the receiver into another bank. In this way, the process of credit creation goes on. By making investments, a bank also create credit by making investment in security. It buys security from stock exchange and then credits the amount in the account of seller, or it pays a cross check to the seller which can he collect by depositing it into bank account. Process of credit creation. For the explanation purpose, we have to take folly assumption. Primary new deposit rupees 2000. All the payment and receipts are made through banks or checks. There is no leakage in the credit creation. The central bank does not adopt any credit control policy. Ratio of cash reserve is 20%, which remain constant through all the stages of the credit creation process. Explanation: a customer deposit rupees 2000 in bank A. Now bank A grant loan of rupees 1600 to another customer after keeping rupees 400 20% as reserve. The customer deposit the amount of loan rupees 1600 in its bank B. Now the bank will be grant rupees 1280 as loan after keeping rupees 320 20% as reserve. This is how a chain process of credit creation take place. The uh, The final balance sheet showed that the bank A advised rupees 1600 80% of its deposit as loan and keep rupees 400 20% of deposits of loan. बाकी यहाँ पे सारा ये फॉर्मूला गिवन है, ठीक है, इसको हम आगे स्किप कर देते हैं. हमारे पास आगे आती हैं लिमिटेशंस ऑफ क्रेडिट क्रिएशन. The power of commercial bank to create credit is not unlimited. There are many limitations on the power of bank for the creation of credit. Cash reserve. A bank cannot lend all of its fund. It has to keep a reasonable portion of its fund to meet the demand of its customer depositor. If more funds are required to meet the demand of depositor, then the power of credit creation will be lower. Central bank policies